everyone. Hello, Murad. How are you? How are you doing, Murad? You're right? You good? How is your trading going? Well, today's program, guys, it's another book review. And as you know, as you may have experienced it here on this channel, it's not just going to be a book review, but it's more of, me summarizing and explaining the content to you. You understand? And today's program, guys, you will be gobsmacked because today's program is about a book which is very interesting. I'd say, and I'm a very picky person, I'd say this is the best book about day trading that you have ever read or that you have ever seen or whatever. It's this book right here, The New Trading for a Living. The New Trading for a Living by Dr. Alexander Elder. He's originally from Russia, but he grew up in the United States of America. And it's very funny, the way he describes certain scenarios is always, he's always right to the point. He's very blunt. No kerfuffle, no blah, blah, no marketing. He is just very direct and very open the way he says things. And as I said, the guy or the author of the book, Dr. Alexander Elder, he is a psychiatrist, guys. He is a psychiatrist, and you will see today certain things he talks about is, as I said, he's very blunt, and sometimes, and I'd recommend this book to people who can actually take it, because you will feel hurt sometimes when you read, because he keeps calling traders losers. Most of us are losers, and the way he says things can be quite hurtful, actually. It's not a motivational book where, whereas in the end it gets really motivational, but you also need to understand that he just names whatever the problem is. And I can imagine, oh, that's very good. Did you like it, Murad? Well, yeah. So as I said, the book is quite interesting. And let me share my handout with you. Präsentieren. Wait a moment. Bildschirm teilen. So we've got another expert here. Murad, you just let me know if you understood things from a different perspective or if you see things differently. Teilen. Oh, wait a moment. How does that work? Oh, here we are. Now you see my screen, don't you? You see my screen, right? Yeah, you see my screen. Okay, let's start. Now, as I said, Dr. Alexander Elder, he is a psychiatrist, and he somehow made it to the United States of America. And he says right in the very beginning, on page 1, he already says, I grew up in the Soviet Union in the days when it was, in the words of a former US president, an evil empire. I hated the Soviet system and wanted to get out, but immigration was forbidden. So quite a bit of a struggle right in the beginning. But then he made it to the US, and he then studied at the New York Psychoanalytic Institute, became a psychiatrist, a successful psychiatrist, and a day trader. And right at the beginning, he says, learning to trade has been a long journey. This is important for people who keep asking, well, I have been day trading for about a year, for about 2 years, for about 5 years, but I can't see any success. He says he has been day trading for 20 years, and it has always, it's not going to happen overnight. And from the last book, last month, Atomic Habits, we said, you focus on 1% change every single day, and this then leads to a particular success. As I said, he says, learning to trade has been a long journey, blah, blah. I repeatedly knocked my head against the wall and ran my trading account into the ground. So he experienced it as well. Now, let me start with describing, these are the topics, and I have picked actually 4 interesting chapters for you. Chapter 1 is individual psychology. Yeah, we're going to talk about things such as self-destructiveness. And the funny thing is that there is always somehow in the book, you know, the problem is described, but as well a particular, you know, a very pragmatic approach to solve the problem. And then we've got mass psychology. And I'd say, guys, from my own experience as a day trader, mass psychology, crowd psychology is the most important thing. And what I want to do today is not only explaining it to you, but one thing that he explains in the book is something I have actually applied to my own day trading, and it proves to be quite useful. So this is something I want to explain as well to you, or share it with you. And if you like it, you can try it, and if it works for you, then I'm very happy about it. Then we are also going to talk about risk management, blah, 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 and then practical details. In particular, how do you set profit targets and how do you set stops, right? You may be thinking, well, I'm already familiar with these topics, but wait, because Dr. Alexander Elder has a different approach to it. Now, let us start with something very interesting. Now, first of all, let me ask you the question. Here, or the book starts, yeah, let me start it this way. On page 2, he starts with the question, do you really want to succeed? Yeah. Now, my question to you, I am quite convinced you must have listened to my other webinars, right? Because I'm not doing this just today, but we've been doing this on A1 trading for months and months. We've covered different books, and we have already talked about Atomic Habits by James Clear. You remember? Now, my question to you is, let me change over because I want to see. Yeah, exactly. He compares trading to, yeah, exactly. Hi, Julie. Hello. Now, my question to you is, what has success to do with the last webinar we had about Atomic Habits? Hi, Emily. Hello. What has success to do with what we talked about? There we had, when we had Atomic Habits, right? James Clear. You remember, what did James Clear say? What did James Clear say about change? What did he say about change? How do you go about changing a particular outcome? Do you have to work on the result? Or how do I change things? I mean, you all want to become successful day traders, but why aren't you successful? What's the matter? It's very easy, because Dr. Alexander Elder has as well in the book, from an intellectual point of view, trading is the easiest thing on earth. It can't get easier. Nothing on this earth is easier than trading. But why are only 10% or 5% of people really successful? I mean, how do you change an outcome? What did we say when we talked about Atomic Habits? How do I change? Yeah, I change my identity. So it's an identity-based change. Now, my next question is, what has success to do with identity-based change? How is this related? Success and identity-based change. Dr. Alexander Elder asks, do you really want to succeed? And what does this question have to do with what we have learned when we talked about Atomic Habits? That change happens based on your identity. What has success to do with your identity? What does success have to do with your identity? Or in what way has success to do anything with your identity? I think nobody's watching today. No, come on, stop that. I mean, answer the question. What does success have to do with your identity? How is this even related? What? Nothing IMO. Okay. I think nobody's really watching, or nobody's taking it seriously, right? Because you don't need it, isn't it? Now, what success has to do with your identity is that you need to have when you create an identity, first of all, you need to agree on the fact that you have to create an identity. And we said components of identity is, for example, a set of beliefs, right? Or your conviction, or values, or the way you behave. Your thoughts, your emotions are all part of identity. If you want to succeed, you need to ask yourself, what does a successful day trader or the successful version of myself need to change in order to become a successful day trader? You need to see that version of yourself, right? If you have never answered this question, if you're just trading, right, without having even an understanding of the fact that you need to create an identity which is linked to a version of yourself where you see yourself being successful, where you have all the details, that means imagine yourself being a successful day trader. What would that change in your life? Would you still talk to the same type of people? Would you still wear the same types of clothes? Would you still eat the same type of food, etc.? That means it makes sense to sit down and to think about what success would change in your entire life. Yeah, because then you would realize what is still missing and why you are probably not successful. Then you could probably spot a hindrance why you just don't become successful, right? Success doesn't mean just benefits, but it also means that you have to, there will be some sort of change. So maybe you are just not, maybe your unconscious mind is not ready for this step. That means you could then figure out what the problem is or what is missing, etc. This is something important, and I can imagine that this must be the reason why Dr. Alexander Elder starts his book right with this question: do you really want to succeed? Because he says most people, and you probably disagree, he says most people, they don't want to be successful. He says most traders, they enjoy the impulsive trades because it gives them short-term thrills. And he compares trading, on page 17, he compares trading to gambling. He says trading and gambling have some similarities in the sense of, I do agree there are professional gamblers, but if you are just a gambler, right, then you may see some similarities. And he says, he quotes Sigmund Freud. I think you know Sigmund Freud. He is a neurologist and the founder of psychoanalysis. He's from Austria. And Sigmund Freud compares gambling to sexual pleasure. And he says in both cases, right, it doesn't matter. Gambling is like trading, and both of them are like sexual pleasure. And that's the reason why it doesn't matter if you lose or win. In both cases, you will experience a high, and your body will produce adrenaline and endorphins, right? And that's the problem, guys. This is the problem. Because of the fact that gambling and trading are so similar, and because of the fact that both of them, gambling as well as trading, can be compared to sexual pleasure, and because of the fact that in both cases, no matter what, your body is always producing adrenaline and endorphins, it just leads to the fact that a painful drawdown at day trading won't teach you much. It doesn't happen like this. That's the reason you may be now thinking, oh, now I understand why I don't necessarily learn out of my mistakes, right? Because it is not that easy. You won't just change the way you trade just because of a painful experience. Do you understand that? Because in both cases, as I said, it is like, you know, if you are an impulsive trader, you just stare at the chart and take your trades based on certain candlestick patterns, right? In that case, you are just gambling, because it's not, trading is not just about spotting patterns and then taking trades, blah, blah, blah. You know, and then he says, your body is just producing those hormones. And that's the reason why it's so difficult to change a desired outcome or to reach a particular goal at day trading. You need to take into consideration certain other things. Now, what are these certain other things? He then starts with individual psychology. He says, first of all, you have to clarify the question why you basically trade. Why do you trade? And you can have you can have different reasons. Something which is somehow a key to success is, he says, the goal of a good trader is not to make money. His goal is to trade well. That means if you focus on achieving a particular skill, on building a particular skill, developing a skill, that's much better than you focusing on the money aspect, right? Because, yeah, he says, forget about the money, right? Forget about the money, focus on the skills you can actually develop. And I'm not just talking about trading skills in the sense of being a good, doing your technical analysis very well or doing your fundamental analysis very well. I'm not talking just about this, but as a day trader, it doesn't matter at the end of the day. If you, let's say you, in 20 years, you don't know what's going to happen to you, right? That means forget about the result, focus on the skills. And as I said, it's not just about technical and fundamental, but he says, Dr. Alexander Elder says, reach your personal best. And reaching your personal best means work on your thoughts, work on your emotions, work on your behavioral patterns, work on the level of your unconscious mind, create a new identity, create new habits, break bad habits, etc. Keep a journal, and so on. So this is what he suggests from the very beginning. And there is another hint in the book, which I find quite interesting and very important. Sometimes people say, if I had more money, I'd be successful. If I had this, I'd be this and that. Or people sometimes complain about other, family and friends, and they say, well, everyone hates me and people don't want me to be successful, etc. I'm not sure if you're familiar with these types of thoughts, but Elder suggests here on page 10, he says, forget about all this kerfuffle, just focus on, try to be at peace with yourself. Because if you're not at peace with yourself, you will end up trying to fulfill your wishes in the markets. Yeah. If you have a wish, if you have a certain wish and you're not expressing it, and you're just trying to, try to be at peace with yourself, and trying to be at peace with yourself is work, is hard work. Yeah. That means find a key how to do it. This could mean, for example, meditation could be quite useful. But yeah, you need to be at peace with yourself otherwise you just end up trying to fulfill your wishes in the markets. And if you're now saying, well, I am at peace with myself, I wouldn't necessarily believe you, because everyone has their individual struggles, etc. Some people are just not willing to admit it, but then don't be surprised why you can't be successful. Yeah? And then he continues with one key, something which is quite useful, is he says, he says something could be quite useful when you are trying to be a successful day trader. There is the aspect of a successful day trader is a realist. Yeah, what does that mean? He says being a realist has two components. One is knowing your abilities and your limitations. Yeah, writing this down and working on those aspects. That means having a habit tracker, something like that. And the other thing is, while you are trading, always keeping an eye on the question, what is really happening in the market? And not necessarily being focused on, what does that mean now for my particular trade, but what is really happening in the market, and then writing it down. And he also says, don't just observe the market, but always don't just observe the market, but also observe yourself. Observe and analyze yourself while you are trading. And that's the reason why trading is emotionally so challenging, not because of greed and fear, right? But more of the little components that all basically belong to trading. So he says, observe yourself and analyze yourself. And he then says, make realistic plans, no fantasies whatsoever. Fantasies means daydreaming or wishing, such as the market basically, will turn and then go. Let's say you bought at a particular price, and then it basically goes against you, and you basically are sitting here, have no stop loss, and thinking, well, the market will take a turn sooner or later. This is wishful thinking, right? And that's the reason why he says people not using stops are gamblers. This is what he says throughout the whole book. You can agree, you can disagree. On the other hand, you can agree or disagree, but he says people not using stops are gamblers. Yeah, there is no other alternative to that. You can't put it any other way. And some of your fantasies could be, I lost because I didn't know some trading secrets, or what he also says, many losers think that they would trade successfully if they had a bigger account. Yeah, the if only I had bigger account myth, which is absolutely wrong, because he then compares and comes up with examples where he shows you, even if you had a bigger account, you wouldn't be successful the way you trade at the moment. And exactly. So, and then he says, losers don't realize that trading is intellectually fairly simple. From an intellectual point of view, it's very simple. People, I've read this in the chat earlier on, in today's chat, someone wrote it's emotionally challenging. But when I ask people, what do you mean with emotionally? People just say, yeah, the feelings with greed and fear. But it's not just that. Emotionally, in other words, means what? What does emotionally challenging mean? What does emotionally challenging mean? Emotionally challenging doesn't mean greed and anger, etc. After a couple of trades or after a couple of years, you learn to handle greed and fear and greed and fear. But my question is another one. What does that mean? Emotionally challenging. What does that even mean? Ding, 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 ding. Yeah, hello. You're right. What are you doing? Why doesn't anyone say anything? What does that mean emotionally? You said seconds ago, someone said, let me scroll through these comments. Someone said emotionally challenging. Who was that? Success and identity. Amy, you're scaring me. Great trader, nothing. Great trader. Who said that? Who was it? To be stoic. Okay, wait a moment. Yeah, exactly. Thoughts, right? Thoughts are part of emotional challenge. An emotional challenge does not only mean that trading is challenging for your, for your emotions, such as fear and greed, but thoughts are part of emotional challenge. Yeah, Hasib. But the question is, what does it mean, right? And emotionally challenging means thoughts, set of beliefs, convictions, values, the things you do, even the things you eat. Anything is part of your emotional challenge. Another word for emotionally challenging is it is challenging on the level of your unconscious mind. Someone once said, or someone once asked me here on these webinars on A1 trading, someone said, can you explain to us how I can work on the level of my unconscious mind? I mean, 90% of all your actions are based on your unconscious mind. If you don't know, if you are 20 something now and you have never heard of it, I don't know, then you really need help, because this is so important. Your unconscious mind accounts for 90% of all your actions. Yeah. And unconscious means your beliefs, your thoughts, your feelings, as I said, your desires, your wishes, your fantasies, etc., is all part of your unconscious mind. And one step how to work on your unconscious mind is, for example, reading, guys, is also working on your unconscious mind. Did you know that? Because when you read, you see things from different perspectives. This is one of the fastest ways how you can work on your unconscious mind, on the level of your unconscious mind. When you see things from different angles, reading or meditating or keeping a journal and reflecting, or need to be disciplined. Exactly. Yeah, discipline is important as well, but this is not the topic right now. So that means emotionally challenging means it is challenging on the level of your unconscious mind. And this involves all your emotions, your thoughts, your set of beliefs, the things you automatically do. That means your habits, they're all part of the emotional challenge. You understand? Your environment, exactly, as well. Your environment as well. Okay. So he then says, what is really important is, and it is not, what separates winners from losers isn't intelligence. Yeah, no, it's also not secrets. There are no secrets, and also not education. None of these. Yeah, he says, trade with your eyes open. This sounds so simple, this sentence. Yeah, well, trade with your eyes open, but what does it mean? Yeah, what I could imagine is one aspect which also helped me keep a proper trading journal. A proper trading journal is not just a spreadsheet. Have a real trading journal, write down your trades and observe the patterns that lead to success as well as to failure, right? He says, as we clarified, one aspect we said, if you want to become a successful day trader, you need to be a realist, right? That means no wishful thinking, no wishful thinking. And another thing is working on the aspect of self-sabotage. Yeah. Now, what does that mean? He says, and I am not, but I do want you, I want you to answer the question. Have you ever traded with a hidden psychological agenda in the back of your mind? You experience something. We all experience certain things in life, yeah, in school, at home, with friends, and then you somehow don't feel respected, you don't feel seen, you don't feel heard, right? You feel like people don't acknowledge you for your intellect. I know a couple of people who are, for example, college dropouts, and they say, I am now going to show the world that I am a good day trader. This is a hidden psychological agenda. Do you have that? Wait a moment, where are you? Oh, here. Are you familiar with these types of, are you familiar with it? Do you have a hidden psychological agenda that you take a trade based on a particular thought, such as, I will show the world that I have achieved something. I will show everyone who I am. Have you ever experienced something like that? Okay, that's good. That's very good. And guys, someone earlier on said, who was that? Someone said, you scare me. Guys, this is the way I talk. Yeah, this is the way I talk. I'm not trying to scare anyone. This is the way I talk. Okay, you also girl could never handle her emotions, so she could never be a trader. Okay, trying to, I'm a victim. Okay, okay. So we all have. I mean, I have experienced that as well, right? So that you, especially, what maybe happened to you is, you know, something, a major incident in your life happened. I don't know what. Some people say in school they blame it to us teachers, which is very typical because students are usually very lazy, so they blame it to their teachers. Some other people say it's because of my family, this and that happened, and then they're thinking to themselves, I will now keep my mouth shut and I will show the world what I have achieved and what a brilliant person I am. Most people have that, right? So now let's have a look at this point. I do understand that you do have that because life, you know, life is not simple and there are certain struggles. But the thing is, and this is very simple, guys, just stop doing it from now on. Because forget about it. Forget about that. Forget about the hidden psychological agenda. If you feel, and I am sure that you don't do this every single day, but I can imagine that some of your losses, right, some of your failures in day trading come, or yeah, some of your losses come from that particular thought, I'm going to show you who I am. Yeah, not every single day, not every time we trade, but every now and then when we don't feel, you know, when we feel weak or whatever, we have that thought, I'm going to show the world who I am. And guys, you know what, what you can do? On those days, just don't trade at all. And keep a tracker where you write it down. Am I feeling, do I have this thought today? Yes or no? It's just a yes or no question. It doesn't happen every single day. If it's a yes, don't take a trade. If it's a no, then just do your, you know, do your technical analysis, your fundamental, blah, blah, blah. But I've tried many ways how you can stop trade, or how you can stop destroying yourself when you have this hidden psychological agenda. There are different other methods, but the fastest method to get rid of this is just put it aside. Just have a habit tracker where you write it down and ask yourself every morning, do I have this hidden psychological agenda today? Yes, then I don't take any trade. No, well, then let me analyze the chart. It's as simple as that. Becoming aware of it is the first step to recovery anyway, isn't it? And he says the problem is when it comes to self-sabotage, right, as he calls it, as Dr. Alexander Elder calls it, he says that most failures in life happen because of self-sabotage. You fail in your professional, your personal or business affairs, not because of bad luck, but usually because you just want to fulfill a certain wish to fail. He says self-sabotage, the hidden psychological agenda, is something like, it is something like a wish to fail. And in order to get rid of it, just identify it, become aware of it, and be open about it, and don't trade when you have that particular thought. And with time developing, you will get rid of it. And this is, as he says in his book, he says this is not only for day trading, but in life general. Just forget about hidden psychological agendas. Nobody cares about you guys. This is all you creating it. And then he also says that the problem is the market itself, right, doesn't have any safety net. There are endless opportunities. That means there are endless opportunities to self-destruct. If you don't know how to handle the emotional side of the game, if you have no habit tracker, if you are not actively building good habits, if you have no discipline whatsoever, if you are not breaking your bad habits, if you're not open about your hidden psychological agenda, well, the market will invite you again and again to destruct yourself, to self-destruct. Yeah. So self-destructiveness is part of the game because the market has endless opportunities, and there is no safety net or something like that. Now, what you can do in order to control self-destructiveness is that, first of all, these are 2, 4, 5 tips that the book doesn't mention the tip, the 5 tips chronologically, but I've read and reread the book, and I'd say these are the 5 important pieces of advice I can give you in order that you can control your self-destructiveness. First of all, be aware of your tendency to sabotage yourself. That means someday, there are certain days we have the tendency to sabotage ourselves. Sabotaging yourself means you're talking to yourself in the sense of, I will show the world how great I am. I come from such a poor background, poor me, and I will show the world that even I made it somehow. Yeah, this is self-sabotage. It may be true, but guys, just stop that. The other thing is, stop blaming others. Take responsibility for your results. Yeah, it's not, and don't blame your account size. Don't blame your account size. Don't blame your whatever, your environment, your surrounding. One thing everyone can do, is in your trading journal, always write down why you entered a particular trade and why you closed a particular trade. What was the strategy? And then you will see that, which of the strategies, which of the patterns lead to a particular success and which ones are not successful. And strict money management, obviously. But I will also say something about this later on. Now, what I want to show you is something I am not very happy with, because in the book, Dr. Alexander Elder describes it rather in a very theoretical way, and I found a way to apply what he says. But you may not agree. Well, it works for me, but you may not agree, but just listen how I would turn his theory into practical work. Now, what he says here, first of all, is he says, this is chapter 2, mass psychology, crowd psychology. He says, price bars, right? I will show this on a real chart in a few seconds. Price bars, they reflect certain feelings and emotions. This is always a battle between, fear and greed, etc. Higher time frames reflect emotions so much better than, for example, hourly time frames or time frames of 30 minutes. And based on existing emotions, you can create multiple scenarios, and based on the scenarios, you can decide what to do on a daily level. Please bear these 3 points in mind, because I'm going to switch over to the chart. All right, you understand? So price bars reflect feelings. Higher time frames are so much better when it comes to reading emotions, and based on those emotions, you can create multiple scenarios. Now, this is GBP US dollar, right? GBP US dollar. This is not the monthly chart, but 12 months, right? Here it says in German 12 Monate. Not any different from English, so 12 months, right? This is 1 year. That means every single price bar you see here reflects a year, a whole year. That means this is, let me zoom in, this candle is 2022. This one's 2021, 2020, etc. You understand? Now, he says, try to read, forget about bulls and bears. The terminology comes from, from farmers anyway. He explains the name Wall Street. Wall Street was once literally a wall that was supposed to keep away the bulls and bears coming from southern Manhattan, something like that. I don't know it either. But he says, forget about bulls and bears. None of us are farmers. I don't know about you, right? But I can't relate to farmers, or maybe you either. But he says, forget about bulls and bears. Try to read what emotions were existing. And as you can see, this is 12 months, right? That means this is 1 year. Within a year, that means in 2022, this is I mean, I don't know how the candle is going to finish by the end of December, but this is how the candle looks like at the moment. This is 2022. So that means we have a long-legged candle with a convincing wrap body so far. And you may be thinking, well, it depends on now how this candle is going to close. But what you can read is, what you can see here is already, we have a candle which shows a very pessimistic mood, right? A pessimistic mood because there was a breakthrough, this level right here, and then we had a new low. And what we can see, this must be a convincing pessimistic mood. So he says, ask yourself, what is the dominant feeling in the market, first of all, and then ask yourself, how did this unfold, right? This is 2022. If we check what happened in the last 6 months, this is the first half of the year, this is the second half of the year. So the first half of the year was pessimistic, right? It was dominantly pessimistic, convincingly pessimistic. And all of a sudden, in the second half of the year, we have a change, right? The mood starts changing. Now, you may be wondering, but how did this unfold? When did it happen? And then you realize it happened quite quickly. It happened in the last 3 months, right? So this happened in the last 3 months. This can now, based on what you can see on the emotions, right, on the feelings of the market, you can create multiple scenarios. Scenario A, B, and C. Scenario A is, let's say December is going to end like this, an engulfing candlestick, right? An engulfing candlestick. So quite convincing that this must be the end of the pessimistic mood. Now, you may be thinking scenario A is the optimistic momentum will just continue. And Dr. Alexander Elder says, compare the market, or compare what you can see in the market, what you can see on a chart, compare it always to real life situations. Imagine you now, this is you, right? You all of a sudden, this is you, right? For months and months, you were depressed and pessimistic. And all of a sudden, things basically changed because you took responsibility and things are just going very well. What would you do in this scenario? I mean, you would just continue the optimistic momentum, wouldn't you? You would just continue on because you would basically want to benefit from it. You would say, wow, now I feel great. I forgot my my girlfriend, my ex-girlfriend or whatever, right? I forgot about the stress in school, etc. And now I'm doing so great. I'm very disciplined. I train every morning, whatever. My trading is going very well. All of a sudden, there is an optimistic change. You usually would now want to continue that, isn't it? That means this is scenario A. Scenario B is you could be, you could also become slightly pessimistic. First of all, you could be thinking, well, things are going so well now, but I don't know. I have no idea how long this will last. Yeah, this is a price correction. Yeah, then you would have a price correction because, sometimes people are like, well, things are so great now, but I'm a bit skeptical. Maybe, maybe I am too naive. And that would be a price correction. That means scenario B would be price correction in the first 3 months, for example. Scenario C, which is not likely to happen, based on what we can see, is no clear direction. I mean, compare it to yourself, to a real life situation. You are overwhelmingly optimistic, because engulfing pattern means you're overwhelmingly optimistic. Why would you now, after that, you wouldn't now not know what to do, right? That would be a bit weird, isn't it? So that means no direction for the next 3 months. We don't expect that there will be no direction for GBP US dollar. So what I think is, for the next 3 months, you can trade GBP US dollar quite well, because, as I said, because of the scenarios we have, right? Either A or B. Now you may be thinking, well, how do I know which scenario applies? This is very simple. When a new month begins, just let the market decide. And then you know where they are heading, and then you could think of what is more likely to happen. Is it more likely that scenario A happens? Is it more likely that scenario B happens, or scenario C? Whereas we said scenario C is rather not going to happen. Or is it maybe something in between? Maybe some parts of scenario A, and some parts of scenario B. You understand? This is the reason why we have the higher time frames. And then you basically go down to monthly level and you see, maybe scenario B is going to happen in January, because already what we can see is that the overly optimistic mood seems to fade, as it looks like right now, right? Yeah, there are different, Now, based on your plan that you created, on the scenarios you've created, you can continue on the monthly level and then see which one applies best, and then on the daily and hourly level. And then you know when to be very careful, right? That means at the moment people are very optimistic. That means selling would be selling wouldn't be necessarily wrong, but you need to be careful, right? Because people are very optimistic now. There is the optimistic momentum right now with GBP US dollar. You understand? And this is what I can imagine this is what he means with, he says, don't just analyze it, but also, do some forecasting in the sense of create some or anticipate certain scenarios. And I can imagine that this is what he means. I don't know it exactly because he doesn't give any further details, but this could be one way of how to use his theoretical knowledge. And as I said, he keeps saying, just compare scenarios you see on the market to common sense. Maybe I'll read this to you on page 48, right? On page 48. Was it on page 48? Yeah, here. Yeah, here. He says, compare this to what happens to, exactly. Now he says, compare this, that means, your analysis, compare it to what happens to a man after a fall. If he falls down a few steps, he may dust himself off and run up again. But if he falls out of a second-story window, he's not going to run anytime soon. He needs time to recover. Yeah, you understand it? And guys, if you fall off the bloody cliff, you're not gonna dust off yourself and continue with trading anytime soon. And falling off a cliff means destroying your trading account again and again, because then it will break you. It will break you as a person, and you will end up frustrated. You will be one of those people on the internet writing, Forex is scam. Forex is not scam. You are someone who is not working on yourself hard enough. This is reality, but nobody wants to admit it. Nobody, because people nowadays think they're perfect, isn't it? I mean, we're all perfect on the internet. Nobody wants to blame themselves. They say Forex is scam. My broker is a scam. Okay. Chapter 9 is about risk management. And what I love about this is that, wait a moment, I wanted to say something. Exactly. I hope you understand. Yeah, this is what I wanted to ask. Do you understand that using common sense can be quite useful, as well as, you know, creating multiple scenarios, and based on those multiple scenarios, having a strategy what to do on the daily level? Do you understand that? Whoops. Because this is what I wanted to ask you. If you, I took an, where is my note? Do you understand that? You should do after you lose a trade. I am going to talk about the question, what are some things you should do after you lose a trade? Because there is also a chapter where he talks about what to do, how to come back after a terrible, terrible drawdown. And this also applies to normal losses, yeah? But does the idea make sense to you, creating multiple scenarios and comparing a chart to common sense? Asking yourself, for example, when you have a, you know, when you have an optimistic momentum, that usually you would continue this, etc. Does that make sense to you? Guys, can you say something? Okay. Chapter 9, risk management. Now, what he says is, I will answer the question, what to do, how to come back after you have lost. I will answer this question in a few seconds. Yeah, just give me a minute. Risk management is also very interesting, because he says, look, you need to understand something. You need to understand that, first of all, trading is not, you know, trading has nothing to do with entertainment. It is hard work. It is discipline. You are a day trader 24/7. It's a 24/7 job. This is your identity, right? That means you also are disciplined in different other areas of life. This is it, for example. That means trading has nothing to do with entertainment. If you see trading as entertainment, if you have no discipline, no journaling, no trading plan, no money management, not analyzing the markets, or you're someone who's always counting the money in open trades, running after money, wanting money desperately, that means you're a gambler. That means you're looking for an excitement you would usually get with sexual pleasure. And then you are like, you know, you're like trapped, because there is no way out of this. You need to turn trading is like any other job. That means there is a routine, there is a lot of discipline, blah, blah, blah. And he says a definition, he talks about emotional mistakes. He says, don't make emotional mistakes. What I don't like is some of the terms are not very well explained, because he, as a psychiatrist, he sometimes takes it for granted that we do understand certain things. But for example, emotional mistakes are the mistakes that are mistakes like, intuitive response to achieve a certain relief in the short term. That means an intuitive reaction of you to achieve a particular relief in the short term. That means you see a chart and you just see certain patterns. You've read some pieces of news, or you listened to someone on the internet, blah blah blah, and then you just take a trade. You don't open up your trading journal and write down, this is where I enter, this is where I exit based on this and that strategy. This is an emotional mistake. All emotional mistakes have in common that they're intuitive, and the very purpose of all emotional mistakes are that you just want to achieve a quick relief. You understand? And he says, avoid emotional mistakes. What you can do instead is count the pips, don't focus on the money, focus on your personal best. And one thing which is also very important on page 198, where he says your success depends on your willingness to cut losses. At the end of the day, we may all have different trading plans and trading strategies. At the end of the day, your success depends on your willingness to cut losses while they are relatively small. Yeah, and the best thing is use logical stop losses, because otherwise you'll just end up hoping for a reversal, right? And he then says, he asks a very important question on page 200, and I'm a bit surprised that nobody on the internet has ever asked this question, because he says, why do we accept, and now ask yourself as well, why do you accept a high probability of making things worse, right? We all know this, right? We opened a trade, we didn't use stop loss, and now we see that the trend goes against us, but we have this, we have multiple chances to basically close our trade, but we are willing to make things worse. Why don't we accept the risk, or why do we accept the risk to turn something manageable into a disaster? This is what I always wanted to know. I want to see your answers, because people are usually not very honest. You must have experienced it, right? You have these multiple chances, You have these multiple chances. You could close your trade, but you're not willing to do so. You're waiting. You're waiting for the disaster to come. You're sitting there for hours and hours, staring at your chart, and you're waiting. You are desperately hoping for a disaster. And then you're crying because of the disaster. But you're not saying to anyone, guys, I was sitting there for hours and hours, maybe 4 days, I didn't close anything, and I ended up with a disaster. Why are we willing? Why is it in life that people are willing to accept a disaster? Because it's not just true for day trading, but in different areas in our lives, isn't it? Why are we willing to accept? Why do we accept disasters? Why don't we say, all right, we've got a manageable failure, we can handle it. Why are we not willing to close our trade when it's manageable? Why are we waiting for a disaster? Yes. one answer is, and this is, I'd say, quite convincing to all of us, most people see money as a proxy, or money is usually, you know, money is related to personal achievement. People think, if I can show the world how much money I have, I can show the world my personal achievement. I am someone because I've got money, right? Self-regard and achievement is usually connected to money. People see money doesn't mean anything, but to people, to most people, I mean, obviously we need it to survive, etc., but I'm not talking about this, but usually a certain, you know, wealth, a certain amount of money means self-regard and achievement for so many people. Is this true for you? Would you agree on that? No, but you were losing. You can't be hoping for more profits. If you are losing and you can obviously see that you are stuck in a trade, and it usually happens the way that you have multiple opportunities to close the trade, but you're not willing to do so. You're just not willing. You are waiting for a disaster. Yeah, wishful thinking. But as I said, have you ever experienced that? I am going to give an explanation, or the one that Dr. Alexander Elder gives. He says money is usually related to personal achievement. Have you ever had this? That you say, if I can show the world how much money I have, I can show my family, my friends, to my enemies that I am someone, I have achieved something. Okay, that's right too, yeah. Exactly, yeah, just a little that one. So if you have experienced that you see money as something like, you know, that you can show the world what you have achieved, then you need to work on that aspect. If you think money and wealth says something about who you are, then you can understand the problem. That means in your eyes, wealth equals identity. And that's the reason why we can't close losing trades. Because if you close losing trades, guys, what are you saying? You are saying, I am a shitty person, because this is the opposite of, you know, when you say wealth, money means identity. I am someone, I have achieved someone. If you close a losing trade, you are saying, guys, look at me, I'm a loser. Yeah. So you are somehow working against your identity then. And that's the reason why we feel paralyzed, why we're sitting here, and why we can't just close anything. Because if we closed, we would be against our identity. If we see money as something, as a tool to show the world that we achieved something. I hope it makes sense. Because, and that's the reason, guys, why working on your identity is so important. Create an identity which is not money-based. Create an identity which is based on skills. Be a person with a lot of skills. That means create useful skills. This is much better. This should be the currency to show the world what you have achieved. Skills instead of something, or instead of money. Take something else. It can also be something else. It doesn't matter, right? It doesn't matter, but replace money to as a tool for personal achievement. Because as long as this is ingrained in your brain, you will always struggle to admit that you were wrong with a particular trade. And you will end up every now and then, maybe not every month, but every now and then, let's say, you know, every now and then you will destroy your account because you couldn't close, etc. Something really, or there are a couple of examples of experienced traders. There was one article, but this is what happened in Germany, a guy who went crazy because when I find it, maybe I'll just show it next time. a man who killed his parents, etc., because he went crazy, because he was always lying to his family what he was actually doing. In secret, he was a day trader, right? And then he was also making a lot of money, but then he one day, within a week or something, I don't know exactly, but he lost a lot of money, even though he was so experienced. But you understand? And then after he lost the money, he went up to his mother's house, killed his mother, killed his brother, but the brother survived or something. He attacked his brother, the brother survived, and so on. That means as long as money is related to your identity, one day time will come and something terrible will happen. So change this. Skills, for example, they could be, skills show the world that you are someone or something, that you have achieved something based on your skills, for example. Okay, we're now going to answer also the question how to come back from a drawdown. The main two rules of risk control he suggests are two very simple rules, but this is how it should be. He also says trading should be something simple. The simpler it is, right? That means don't use tons of indicators, use common sense instead, make it simple and apply two very simple rules. The 2% rule and the 6% rule, 6% rule, you must have heard of it. 2% rule for daily trades, right? I can only use 2% of my risk capital on a daily level. And if I reach the 6% on a monthly level, I just have to stop trading on that particular month. Right, the 2% rule for daily trades and 6% rule for monthly trades. And then apart from this, he also says, ask yourself the questions: where to enter, what's the target, when to stop. And someone once said to me, well, I don't know how to let my winning trades run. Before you enter, always ask yourself, what do you expect? What's the target? And he gives here a very useful hint. He says, wait a second. Yeah. He says, use the magic word enough. Yeah. That means be realistic, first of all. Ask yourself, what can you expect? Only enter a trade if it has a return, twice a return than the risk of losing. And then also ask yourself, what would be enough for me? That's also a very good question. Enough is enough, right? And then close the chart and that's it. And what he also says is, obviously, but this is something you know, manage the size of your trades, manage the placement of place the stop losses in a logical way. And what does that mean? Usually people say, there are different rules how you can place stop loss. But what I would suggest to you, something that helps me, is I always ask myself, if I entered a trade, let's say if I entered exactly, okay, let's say I see this chart and I want to enter a trade, and the question is, when you enter a trade, let's say after this one we sold, right? The question would be now where to place the stop loss. It doesn't matter, we're not going to analyze it now, but the thing is, always ask it, have one question in the back of your mind. What needs to happen on the market to ridicule my idea that I had? You always have an idea. Based on that idea, you enter a trade, don't you? What needs to happen on the market to reverse this idea? This is where you place your stop loss. All the things like don't place stop loss where everyone else places it. Guys, this takes a lot of experience. Instead, this is my recommendation, place stop loss where you think this would make my idea, this would basically ridicule my idea. This would prove that my idea was wrong. What needs to happen on the market? What price level needs to be achieved that your idea is wrong. Your initial idea based on which you entered a trade. You understand? This is something you could actually use. Well, at the end of the day, it's about having a strategy for stop losses. He says these are the three magic questions: where to enter, what's the target, when to stop. And now the question, how do you even come back from a drawdown? Now it depends a bit, but there is a certain recipe for traders who are, who basically want to return to trading after a bad drawdown, after a couple of losses, etc. Well, one is it depends on your risk management, right? If you have already achieved the 6% within a month, this is now the beginning of December, 2nd of December. That means if you have already achieved the 6%, that means you just can't trade for the rest of the month. But if you're thinking of coming back, create a rule. And what he suggests is, that means when you want to, the thing is, we as traders, right, we want to take more and more risks with time developing. It makes sense. I mean, you can have a higher leverage, etc. You can trade with bigger trading accounts, blah blah blah, right? Because you're building your trading account. But the problem is that when the level of risk goes up, usually your ability to perform goes down. This is what he says. This is a hypothesis on page 210. And he says, start with little steps. Start trading, for example, only 2 Forex pairs, for example. And then train yourself to accept risks slowly and in well-defined steps. What does that mean? That means set a rule. Tell yourself, if I am profitable during the first 3 months, right, or 6 months or whatever, I go up a step in my risk size. I have a higher leverage, or I can trade with a bigger trading account if this is possible, etc. And if you lose money, drop down a step, start from zero, literally. So if you are trying to come back right now from a disaster you experienced maybe a month ago, you have to start with baby steps. And so the recipe is start small and then clarify what are the conditions, when can you go up or drop down a step in your risk size. And this is literally the meaning of 1% improvement every single month. This is the literal definition of 1% improvement by James Clear, written in his Atomic Habits book. Yeah, this is 1% improvement. Start small. Always know, given what circumstances what makes you go up or drop down a step in your risk size. And then he gives some practical details. One is two things that are quite important. Set a stop loss. You can have your own individual strategy, but as I said, something that really, really helps is always ask yourself, when would my idea be completely wrong on the market? This is where you set your stop loss. And profit targets, enough is the power word. That means what would be enough for you? And what is realistic? What can you expect? If you can't expect anything, well, then you haven't analyzed in detail. So what can you expect and what is enough for you? And these are the six most important points you can actually learn from this book. That means, like, successful trading in a nutshell. If you were to summarize the whole book, and if you were to give people, 6 pieces of advice, this would be it. According to me, this is how I would summarize it. So you can read that all by yourself, actually. One is, don't let others, do the analysis for you. Analyze the chart all by yourself, because based on your analysis, you're going to take trades, aren't you? And then understand crowd mentality. That means understand what feelings are dominating the market right now. Yeah, are these optimistic or feelings, or pessimistic, or are people maybe, you know, indecisive? That could also happen. Don't argue with the crowd, but ask yourself, when can I enter and when should I leave? And then, as we had it already on page 198, he says the intellectual side of trading is modest, but the emotional demands are immense. And emotional trading or impulsivity is not good for your success anyway. And emotional mistakes are, and as we said, you know, emotional mistakes are intuitive responses in order for you to achieve a particular goal in the short term. This would be an emotional mistake. And then also number 4, as we said, have an equation in the back of your mind. Money doesn't show what you have achieved. I mean, then you could sell cocaine and you would make a lot of money probably. Then go onto the streets and do something like that. You understand? Money doesn't equal what you have achieved. Maybe it's knowledge, maybe it's the set of skills you've got. Because as long as money is so intertwined with your identity, you will never learn how to close a losing trade, or how to deal with losing trades. It's even not about closing. Let's say you use stop losses, but then with time developing, there will be times you feel like a loser because you have a couple of losses, right? If you want to prevent yourself from that feeling, what you can do is, as I said, don't have the equation money equals achievement. Yeah. And something he says on page 201, he says your actions in response to surprises will define you as a trader. That means know what to do when a surprise happens, when something out of the blue happens, something unexpectedly. Yeah. And the last one is something I've mentioned earlier on, isn't it? And I'd say, yeah, and now you may be wondering, well, that's a lot of information, but what you can do is basically start with creating a habit. Creating an identity, just like that. Exactly. Create an identity. Exactly. And yeah. Okay, guys. This is it for today. It was a lot, actually, wasn't it? But these were the most important aspects. If I were you, if you have time, I would definitely read this book, The New Trading for a Living. It is like one of the most important books ever. Yeah. Read it, reread it, take notes, etc. And if you want to, you can basically, yeah, that's true. I'm so sorry. Yeah, I hope I mean, if you have any questions, if you read the book and you don't understand certain things, or if you want to share anything, just leave a comment in the comment section, and yeah, and then I can answer your questions if you want me to do so. Okay, I think this is it for today. I wish you all the best with your trading. And as I said, trading is, literally hard work, and it is something that you do 24/7. There is not a trader and someone else, there is not any other identity. You can't be a trader from Monday to Friday and something else from Saturday to Sunday. Then you're probably not a trader, probably not. Yeah, a trader is someone that's an identity. to the people you surround yourself with, or to the type of people you talk to, what you do in your free time. This all defines who you become as a day trader. And there is the great professor Jordan Peterson, Professor Jordan Peterson, you must know him. He says what you do in secret is as important what you do in public, because what you do in secret is a lagging indicator for the results you have in life. Yeah. And there are other things. I mean, there are like important, there is the author Victor Hugo. He says, dis-moi ce que tu fais, je te dirai qui tu es. Tell me what you do on, you know, every single day, and I tell you who you are. I mean, keeping a habit tracker, you just need to take things a bit seriously, and then success will basically come. You can't avoid success if you really take it seriously. It's just a matter of time, that's for sure. Where can I get the book? I mean, you can buy it online. I just bought it online. I bought it online, and then, yeah. Okay, guys, so have a lovely evening or morning or afternoon, and hope to see you soon. Take care and enjoy trading. Bye. Bye, guys. Bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.